Hi, this is Kerry Artak with Wicked Stocks, bringing you your daily Tesla report for Monday, July 15th, 2024. But before we check out the charts, I just want to ask you to please click like, share, subscribe, and check out wickedstocks.com, where we offer a full suite of both daily and weekly analytical videos, just like the daily Tesla and daily NVIDIA reports, daily analysis in the SPY, daily analysis in the Triple Q, weekly analysis in the S&P 500 index, the NASDAQ 100 index, and Apple stock, as well as 2 individual stock picks a week that you never see on YouTube that cater to the 3 to 5 week swing trader out to the 3 to 5 month near term investor, always looking for 20% moves or more on those underlying stocks. And you get to see all of this for free. We offer a 5-day free trial up front. So check out wickedstocks.com. Let's take a look at the chart. Start with the big picture, work our way into the day and week itself. It was a couple of weeks ago that we settled above this 1-year descending channel top that is well below the market this week at 205.87. Once again, this is a weekly chart, above which we have a 3 to 5 month buy signal in play at 327.58 with present volatility and the directional dynamic that sustains itself following last week's settlement still above the 243.83 rising channel top will allow 327.58 over the next 2 to 3 months, potentially, by the end of September, if present volatility and the present sort of market direction sustains itself, you can see this could be just a complete vertical move over the next 5 weeks or so, 5-6 weeks into the 327.58 area. On the way up, we would need a settlement. There is one key area that we failed at last week, and that's 265.13, still just a session containment level. That is the December 23 high. And now we're at the daily chart, and you can see certainly a frustrating day on Friday for those of you who may have sold the open below this channel top, 241.38, and the 5/8 longer-term Fibonacci level that we also open below. Our system is a settlement-based system on the daily chart. And so we cannot consider this to be a sign of weakness. Having closed above 241.38 does maintain 265.13 as a likely, I'll call it a 3 to 5 day target. We could see that within a day or two. Over the next several weeks, 289.52. And yes, as we continue into September trade, that long-term resistance area, 327.58 in reach, holding above 241.38. So working upside today, we've got Friday's high of 251.84, 252.05, just above it is, I'm going by memory here, I think a 50% upside retracement over the last 2 days extremes. But 256.52, I think, is your 5/8. It can contain intraday buying pressures. Day traders could buy the 237.98 to 241.38 region and hold out for 256.52. Pushing through 256.52 does allow 265.13 within the day, where we can top out for the day. And once again, if settled above, should then yield 278.98 within the week, 289.52 by the end of next week, so forth and so on. So if you're still looking for, I'm talking to 2 to 3 week swing traders, I see no good reason to play the short side yet in Tesla unless we were to close below this area, and we've yet to do it. Friday was a gap lower situation. Some people wait a half an hour to see how things flesh out, but others act immediately and quickly, and I don't have a strong opinion about either approach. But it was a frustrating trade if you played the short side out of the gates on Monday. You bought it back at a loss probably as the day wore on. But if we're just looking at the daily chart on a day-by-day basis, having settled once again above the 241.38 formation, maintains a bullish posture as we move into August trade. Now, if we were to close below 241.38, and I would throw in 237.98 there I would say 237.98 just for kind of the clear sell signal that it would present. But even closing below 241.38 doesn't look good in my opinion. I guess maybe the way you could play that is if you're long now and we close below 241.38, but not below 237.98, you could at least exit your long position. If we close below 237.98, you could reverse entirely. Let's take a look at the day chart on the way down. We do have a rising 1/3 speed line at 230.19. So if we break 237.98 today, 230.19 in reach, and if we close today below 237.98, we have a 1 to 2 week objective into these convergent channel structures that are 199.15 rising channel support and that long-term 1-year descending channel top at 206.37. So 2 to 3 week swing traders, 1 to 2 week swing traders, you're bullish, you're long above 241.38, anticipating those upper price points that I mentioned earlier. And inversely, if we close below 237.98, you're short into the 199.15 to 206.37 area. And I will also say that if we get a wild day today and we also close below 230.19, we should, by Friday's close, fall into this significant zone of mid to longer term support between 199.15 and 206.37. But under most circumstances, say closing below 237.98, 1 to 2 week swing traders may reach for 200, 205 strike out of the money puts that don't expire for a month. I see that as a 1 to 2 week play at the most. Until then, holding about 241.38. All systems go to the upside still anticipating higher trade, the upper 280s over the next 2 to 3 weeks. So you might reach for, say, 290 strike out of the money calls that don't expire for, I would go, a couple of months out, 2-3 months out on that, even though it's a 2 to 3 week play. And as I've been saying, you could also reach for a 325, 330 strike out of the money calls that don't expire. This is still a 3 to 5 month play, but as I said earlier, we may see this possibly by the end of August or end of September. And so you could consider, given the fact that we've fallen away, now volatility is still high, but if volatility wanes following the last couple of days of wild trade and wide range, if volatility begins to wane, these out-of-the-money calls, the 325s and 330s are going to get a little cheaper. You'll see a bit of a collapse in premium, regardless of whether they're just expiring in 2 months or in a year. But in any event, obviously, those that are expiring in a year are not going to contract as much. You could consider still a 3 to 5 month play, reaching for 325, 330 strike out of the money calls that don't expire. I would go at least 3 months out on that, probably more like 6, to be quite honest with you. But I think I've said it all. I do want to remind you, Tesla is part of the NASDAQ 100. This is the Triple Q, the ETF that we analyze every day. And the Triple Q is having trouble at this 4.5-year channel top. It's been testing it now for the last 2 weeks and actually closed negative on the week, unable to close above it so far. And if it does, yes, that's bullish continuation into later year. But until then, the NASDAQ 100, of which a Tesla is a primary component or a key part, a big part, let's put it that way, is susceptible to significant bearish rotation from here as we move, through the rest of the third quarter. So keep that in mind. There is sort of a divergence right now. If you're bullish Tesla, in my opinion, now they're not the same market by far at all. But if you're bullish Tesla, if you're long Tesla over the longer haul, maybe anticipating this 327.58 area, you certainly want to see a settlement this week at 504.50 or higher in the Triple Q. That would support that trade, no doubt. Until then, you're going to need a divergence between the index itself and Tesla, and that certainly may happen because this is one stock that does go it alone for protracted periods of time. So I think that's all I've got. Please click like, share, subscribe. Check out wickedstocks.com. Last week we put out Rivian and Newmont Mining. Both are very relevant videos to analyze. We do daily Triple Q, daily SPY analysis. Check it all out for free. You got a 5-day free trial up front. I'll be back tomorrow with Tuesday's Tesla report. You have a great day.